Hi, my name is Brett Swartz. I'm founder of Capital Gains Tax Solutions. In this video, we're covering if I'm under contract, can I still use the Deferred Sales Trust? The answer is it depends. We want to take a look at exactly where the buyer has or has not removed all contingencies. So the number one thing that we want to really focus on is the timing of the sale. And if the buyer has removed too many contingencies or all contingencies, something is triggered called constructive receipt. Now, constructive receipt is a legal term, which basically means that there's nothing holding up you as the seller from receiving the capital. Okay, and I'll give you an example of a way to avoid constructive receipt is working with a 1031 qualified intermediary before close of escrow to make sure the funds are properly sent to this qualified intermediary. Now, remember, 1031 exchanges only work for investment real estate. It does not work for primary homes, cryptocurrency. It does not work for business sales. And so the crucial aspect of constructive receipt for every other asset that's being sold, we need to have the deferred sales trust set up before the buyer removes all contingencies. And so that's really simple. Step one is to set up a deferred sales trust. You come up with a name, and our team helps you to get everything set up with the tax attorneys. And then step number two is providing specific language to insert into an addendum as a part of your sale. It could be part of the purchase and sale agreement, a part of the asset purchase agreement, and it's an addendum that's stating something along the lines that the seller and the buyer agree to cooperate with this deferred sales trust, and essentially that the funds are going to go to the trust instead of going to the seller. And so again, that's going to avoid constructive receipt, which is going to be able to defer the tax. If you think about it like this too, if you have like an IRA or a 401k. Now, in those scenarios, like a 401k, sometimes the funds are taken directly out of your paycheck and put into this 401k. Sometimes with IRAs, you can do it after you receive the funds, as long as you do it before the end of the year. But the idea is that these funds are going somewhere else rather than in your personal account to be spent on personal use. Therefore, that's where the tax deferral works. Okay, so here's an important thing, though. We do want to encourage you to be very, very early in your due diligence with us, with the Deferred Sales Trust, with cooperating and talking with the potential buyer of your asset. In fact, we're doing a deal right now where I've been speaking with the owners for about a year, and they loved and really wanted to use the Deferred Sales Trust. They got into a deal, and all of a sudden they're a week from closing, and they're like, "Hey, can we do the deal?" And it's like, well, yeah, we technically can if the buyer hasn't removed all contingencies. But number two, we're throwing a lot at some people who might not know what we're doing, right? And in fact, this deal was on the East Coast, and for this particular title company and these real estate professionals and attorneys, they didn't know about the Deferred Sales Trust, and so it's a lot to put on someone's plate at the last minute. So technically, we can still do the deal, but it's not without all of the stress and all of the heartache. So if I'm under contract, can I use the Deferred Sales Trust? Yes, but you want to be early with us. That's part of why we offer the Deferred Sales Trust, all of the consultations, all of our educational series at no cost to you, because we want you to feel no pressure to use the Deferred Sales Trust. And if for some reason you don't use it, or for some reason the deal falls apart, then you don't owe my team any money, nor the DST tax attorney. So if you want to learn more about this, you can go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. By the way, we also have a Deferred Sales Trust cryptocurrency mastermind happening every Friday at 10 a.m. Pacific Standard Time and 1 p.m. Eastern Time that I want to invite you to. So whether you're selling cryptocurrency or selling a business or real estate, and you're just wanting to learn about the Deferred Sales Trust, I make this thing simple. Think of it like a classroom. I'm hanging out with a few of my business partners and some clients, and we're just talking about the Deferred Sales Trust. It's on a Zoom meeting, and no questions are bad questions. And you can come in and kind of hear the deal close story of the week, kind of the vision for the Deferred Sales Trust and capital gains tax solutions, and how we're working with clients and strategic partners, and then just answer any questions that you might have. And I really encourage you to attend that. It's totally free. You do need to register, though. If you register, you can go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. And there's a banner that you can click on that says the Deferred Sales Trust Cryptocurrency Mastermind. Hey, thanks so much for watching this video. Please rate, review, subscribe. Please share this with somebody that it could help. And we so appreciate everyone out there, and hope to talk to you again.